Hey guys, and welcome back to a new trade recap on US30 today. But first of all, if you haven't claimed your Scalper Pro 10-day free trial yet, make sure to do. The link for that is the first link in the description and also pinned in the comments. And before we jump into TradingView, let's have a look at the current testing results for the second quarter of 2023. Here's a quick look at the results of the first quarter of the year 2023. Right now we're looking at 27% net profit. Our win rate is roughly sitting around 47%, and the majority of our profits on US30 have been made during the London kill zone, the 3-hour timing window, which is adding up to 26% so far this month, and we still have roughly 1 week left this month, so we will see how it's going to perform. And especially after last week, where we made 16% net profit during the London kill zone alone. New York unfortunately didn't perform as well last week, but anyway, let's have a look at today's London kill zone and what's printed so far on the New York kill zone. Now it's 1:55, and with the next 5-minute candle, the London kill zone will start, and that's when we consider to take potential entries. We don't care about any entries that we would have received between or outside the London kill zone, basically, until the New York kill zone is starting. At least those are my rules, but of course with your own backtesting you can also trade for more than 3 hours in the morning during the London session and continue trading up until the New York kill zone, because we tend to get some nice moves in between the sessions. But because I want to have a clear schedule for the day, a 3-hour timing window where I'm working and trading the market actively, that's my timing window. I also recorded a live execution video today. The link for that will also be in the description box below, where I'm going to show you all my executions with my MT5 setup and everything else. But now let's get back to the core of the strategy. Right now we are below the VWAP. We have bearish colored candles right here from the Scalper Pro indicator, and right now the stochastic RSI crossed over bullish 1 candle or 2 candles prior to the London opening. So right now we do not expect a new bearish entry for a possible continuation short. The last entry short that we would have received would have been right here at 1:30 AM New York local time, with our stop loss at the swing high, roughly above the VWAP, going for a 2-to-1. Would have been the only entry we could have received in this movement to the downside. But because I do not take trades outside of the kill zone, I did not participate in this trade. So now we're just waiting for our next best entry opportunity short, because right now, unless we close above the VWAP with a blue colored candle, we do not enter into a long position. So right now it's best for us to prepare for a short, even though we already had a substantial drop to the downside, roughly of 50 pips so far. Right now, all we're waiting for is the stochastic RSI to make its way back to the upside and give us a potential short entry. So right now we can skip through most of those candles, and we see now the stochastic RSI is back above 50. And that's really when I start to pay more attention to the chart, because now I'm already preparing my trade idea. So right now, if we would get an entry on that next candle, I would either place my stop loss at the body high or the swing high right here. But this would really depend on how that next candle is going to look, and if it's, for example, closing somewhere down here, I don't want to have my stop loss all the way to the upside, because the momentum is clearly already super bearish. So having a too big of a stop loss will make it less probable that your trade is going to hit your take profit. So in this case, I would either go for a 1-bar stop or a stop right here at this highest body close right here on this doji. So let me get rid of those drawings and let's have a look and wait and see when we get our first entry opportunity. Alright, so we see on this candle we also did not get it. Right now we have big wicks to the downside, which is not cool to see, but we will find out. Because I think we also did not get it on this candle. This is also an up close candle. Let's wait. We still didn't get it, so we see that we're consolidating right around this area after this big drop to the downside. It's now 2:50 AM and the London Open at 3 AM New York local time is about to happen. So let's see. We also did not get the entry at 2:55, so we've been teased quite a few times, but it's really important that you wait for the candle to close, because something like this can happen, and you think we're going into a short and you maybe place it a little bit too early, and then all of a sudden, within the last 15 seconds of the candle, or 30 seconds, price is reversing completely. That's why it requires your full focus during those 3 hours for you to perfect the entries, because only if you perfect your entries you can reach the results that I have shown you in the backtesting sheet. You're not allowed to make any mistakes whatsoever. So let's continue, because with that London Open candle at 3 AM we finally crossed over. I prepared my trade. I placed my stop loss right here at the swing high. Because this candle did not close all the way right here to the downside, I decided to go for the swing high in case we might get a pullback. You could have also placed it somewhere around here, but it's a rather small stop loss of 9.5 pips. So I played it safe and entered with the stop loss right here at this swing high, going for a 1 to 1.5 risk to reward ratio to break even. And for our full take profit to be hit, I went for a 2 to 1 risk to reward as usual. So let's see how this trade played out. Big doji, and then we got the short momentum to the downside, so I was really excited about it because I was waiting for it to hit my break even target. But unfortunately we did not get it, and we almost completely engulfed this massive short candle to the downside. This is not a good sign for a short trade, but anyway we will stay in it because we don't know what is going to happen. It's all up to probabilities. So this is our entry right here. Let's click through it, and we see that on that very next candle, massive bullish candle, we have been stopped out right here. But what happened at the same time? Of course, it's a little bit sad that we didn't trigger our break even. If we would have went for a smaller stop loss right here, we would have also been stopped out right here. So our stop loss placement at the swing high has been appropriate to the market conditions of this tight consolidation right here. But on this very next candle here at 320, we got a new entry opportunity long. And now let's do it a little bit more interactive. Where would the best placement be for your stop loss after such a big bullish candle, which successfully had a range of 25 pips? So would you place your stop loss based on the ATR indicator, which would basically mean you're placing it inside this candle, so your stop loss would be right here, right at this level? That would be the ATR stop loss. Would you place it all the way at the swing low right here for a 36 pip stop loss, or would you place it right in the middle for a 1 bar stop? I actually decided to go for a body stop, because in case this close above the VWAP has been a fake out, and we or not really a fake out, but let's say price likes to retrace and fill in some of that area right here to the right side. If we place our stop loss at the ATR level, we do not really allow it to move completely to the downside, especially if we count in for spread. So I decided, and lots of our community members actually had it right as well, place their stop loss for a 1 bar stop. And I typically do this with big candles, because I don't like to have a stop loss that's too big at the swing low. There's no point for me. If we go below this level and we engulf this candle to the downside, this up close candle, super bullish candle, I don't think that the slow is going to hold up. I think we are actually looking at bearish prices again, or a continuation move of this move to the downside that we already saw during the Asian session, where we, by the way, also got a few beautiful entries short into this downtrend. But actually, I also shared it on Discord, we had a 1 minute time frame bullish divergence on the Scalper Pro. I shared all the analysis on Discord, so also make sure to join our Discord server. But let's go back to this trade. I placed my stop loss right here for a 1 bar stop. I entered into the market and my break-even level was sitting at 1 to 1.5. And my take profit was set at 2 to 1 risk to reward for a 50 pip movement to the upside. Alright, so this trade actually took a little while to play out. So we see we got around 30 minutes of consolidation and no real momentum after this big bullish candle right here, which I initially wanted to see. But anyway, we've been in the trade. Let's see. And right here with the new hour at 4 a.m., the new hourly traders or the hourly chart traders, they now entered into the market. Obviously, right here with the new 4-hour opening, the 4 a.m. opening, new hour opening right here, moved to the upside, almost hit our break-even level. So let's have a look at that next candle. We reached our break-even level. Then I think we played around this level for some time until we eventually pulled back. You can also see the stochastic RSI is now below the 50 level, all the way down in the oversold area. We're also forming a pullback, filling in some of this gap right here to the left. So those are all good signs. We're still holding support. And on that very next candle, I think right here, also a bullish engulfing candle. We could have get another entry. Let's say you maybe missed that entry or you didn't like it because it was such a big candle. You could have also very easily entered right here on this candle, even though I do not recommend manually selecting trades that you're taking and you're not taking. You're better off by just taking all the trades. Maybe go for a 10 pip stop loss. In this case, you could have also used the ATR because this time we actually got our entry exactly at the low of the pullback. Typically, we get our entry, let's say, somewhere around this area when we are almost about to break that high. In a case that you might think the low hasn't been formed yet, it's always a good bet to place your stop loss on the ATR level because we're still in the leg down. So right here we saw some sort of a bullish flag pattern. So let's say you would have placed your stop loss right here in case you didn't go or you didn't enter into this trade at 320. You would have also chosen to go for a 2 to 1 risk to reward. This trade would still be running. Let's see how it played out. And we see that it's 4:55. With that next 5-minute candle opening, we also get a new 1 hour candle that's just opening, the 5 a.m. candle, according to New York time, which will also very likely continue with this momentum. That's what we typically see. We see a big spike at a new hourly opening, and then momentum cools down until the next hourly opening for it basically to continue. Of course, not all the time, but today has been a perfect example for this. And our stop loss right here is now also at break even, so we are basically risk-free on this trade. And let's see how it would have played out. So we see momentum continue to the upside with that new opening. We hit our 2 to 1 risk to reward, I think, on this candle. Now we got really close to it, but with that very next candle, we eventually hit it right here. So yeah, our second trade during this London kill zone hit our take profit target. So if you're risking 1% per trade, you would have lost 1% on this trade, and you successfully made 2% on this trade right here, which adds up to a 1% net profit for the day. And if you, for example, missed out both of these trades and you took this later entry during the session, you had basically 3 entry opportunities during the London session. This would have also hit your take profit, and we actually continued rallying further to the upside roughly until the New York session started. And if we have a look outside of our London kill zone, my favorite trading hours, we can actually see that we got another beautiful entry right here on this candle, which also was a up closing candle, but very similar to here. We've formed some sort of a bull flag pattern. So we had a pullback, a move to the upside. When did it start? Roughly at the new hour candle opening right here, 5 a.m. Push to the upside for roughly 15 minutes. Then we pulled back until the next hourly opening right here at 6 a.m. That's also when we got our entry. And because we did not see a clear low being formed yet, like for example this one after this bullish candle to the upside, we could have anticipated that this low is clearly the swing low that we want to place our stop loss, but because this candle has been so big, we decided to go for a little bit smaller stop loss. So what do? Right, we use the ATR indicator. We place our stop loss right at the ATR level to give it some room to breathe. And again, we would have targeted a 2-to-1 risk to reward ratio, which would have been hit right here. So our last entry would have been this one right here, or our next entry actually during the New York kill zone right here with our stop loss at the swing low. Give it a little bit of breathing room because it is the New York session, shooting for a 2-to-1 risk to reward ratio. Let's see how that would have played out. I haven't taken that trade. With the 9:30 opening, we hit our take profit target, a massive move to the upside. So if you would have taken all the trades starting from 2 a.m. New York local time, you would have had one losing trade and 1, 2, 3, 4 winning trades overall. I wouldn't call this a bad day. It's actually a fantastic day. Let's see how the rest of the New York session is looking like so far. I think this might have already been it. That's what we're currently looking at. We would have received a new entry long right here on this candle actually, where we could have also placed a 1-bar stop like this, because it has been a significant candle right here, a massive pump to the upside. That's already a 53 pip stop loss. So we're going for a 2-to-1, which would eventually bring us all the way to here. Alright, and that's basically it for today's trade recap. So I only took those 2 trades because I don't place trades within trades, so I did not take this entry at 4.45. So I ended up making 0.5% net profit on my live MFF challenge account. I'm currently in phase 2, so we will see how that goes. I'm using 0.5 risk for the first 2% I'm making on this account because I want to build up a little cushion before I start to risk 1% like I normally do on my private trading account. Alright guys, that's the end of today's trade recap. We're still in the New York session. We have roughly 40 minutes left until the New York kill zone is over, and I will be active on Discord, so make sure to chat with me over there. And yeah, I hope you liked this video and you have learned something new that might improve your execution and performance during each kill zone. And if you did, make sure to give this video a like and also subscribe to my YouTube channel, because this really helps me out growing our community. And I would say I will see you tomorrow for the London live kill zone, and take care and trade safe until then.